All right, Chat GPT, TPT, let's have a conversation. Tell me about the Cursor deal with Elon Musk.
Elon Musk SpaceX has made a major agreement with Anysphere, the creator of the AI coding startup Cursor. They can acquire Cursor for up to $60 billion, and if not, they'll still pay $10 billion for a strategic partnership. Cursor will use SpaceX's supercomputer infrastructure to scale its AI models, getting SpaceX a foothold in AI developer tools. This also aligns with SpaceX's rumored IPO plans, boosting its AI capabilities.
Yeah, so what's fascinating about this deal is the amount of money that SpaceX is putting up. So pretty much Elon Musk is he's like trading an option here because the underlying is worth 60 billion. And that's where his strike is at, is 60 billion. But the premium was 10 billion. Now, normally when you're buying a company, you know, the deposit you put down, if you don't complete the deal and you lose that deposit, is usually in the neighborhood of 10% maximum, normally like 5%, 5%. So for Elon Musk to be putting down $10 billion on a $60 billion deal is huge. That's like 18%. So why would he do that? Now, the reason he did that is because
he's essentially buying a strategic advantage. Even if the full acquisition doesn't go through, that $10 billion ensures a deep partnership. He's locking in access to cutting-edge AI talent and tools that could accelerate SpaceX's own tech. So it's not just about ownership. It's about ensuring that AI capability lands in his orbit, one way or another.
Exactly. And the other reason why he had to put up such a big deposit was because if he does do the deal, you know, he's pretty much getting this company for 60 billion in 6 months. Now, at the rate that valuations are changing in the AI landscape, and you look at Anthropic, you look at OpenAI, Cursor is, you know, essentially the next tier lower underneath OpenAI and Anthropic. And Cursor didn't even exist like 2 years ago, I believe. When did Cursor first get founded?
Cursor from Anysphere was founded in 2022. So yeah, it's just a few years old, but already
few years old, and it's worth $60 billion. And they're doing, I think, $2 billion run rate right now, revenue. And I think by the end of this year, they'll be at 4 to 6 billion. So let's say they're at 6 billion by the end of the year. They might not be a $60 billion company in 6 months. They might be an $80 billion company. They might be a $100 billion company in 6 months. And Elon Musk is still going to be able to get that company for $60 billion. And that's massive for SpaceX, for Elon Musk, for XAI. For Cursor, on their end, they're kind of like, you know. But once you put in that $10 billion of deposits, or if you want to call it, you know, a payment for services that are going to be used down the road, that's a huge commitment from SpaceX that makes Cursor happy. So, anyways, that's that news. Now let's move on to the next topic, which is the OpenAI, Elon Musk saga and going to trial. When is that court date? What's going on there? Give me all the details and the updates on that.
The lawsuit between Elon Musk and OpenAI is set to start on April 27, 2026 in Oakland, California, and is expected to last about 4 weeks. Musk claims OpenAI shifted from a non-profit to a profit-driven model, violating its original mission, and the court has narrowed the case to unjust enrichment and breach of charitable trust. Key figures like Musk, Sam Altman, and Satya Nadella are expected to testify. The outcome could influence OpenAI's governance and future direction.
Is it going to be live? Is it going to be broadcasted?
No, it won't be broadcast live. Federal court proceedings generally don't allow cameras or live public streaming. Updates will come from reporters in the courtroom, so we'll hear about key moments after the fact.
All right, and so what is Elon Musk looking for in this? You know, what's his goal? What's his outcome that he's looking for?
Musk's aim seems to be about pulling OpenAI back toward its original mission, AI for the benefit of humanity, not just profit. He's argued OpenAI went too commercial after partnering with Microsoft. He wants governance changes, possibly undoing deals or making OpenAI's model more open source again. Essentially, he's pushing for a return to the more charitable, non-commercial vision he claims they once shared.
What was the technical entity that OpenAI was created under? Like a 501(c) or something?
OpenAI originally started as a nonprofit, specifically a 501(c)(3) entity. Later, they established a capped profit subsidiary structure called OpenAI LP, allowing them to pursue investments and partnerships while still connecting to their nonprofit mission.
So, if Sam Altman wins this case, what does that mean for the future of 501(c)(3)s? Are they going to all just be allowed to do that?
Not exactly. If Altman wins, it doesn't change the rules for all nonprofits. It just means the court found OpenAI's structure and actions permissible in this particular case. Other 501(c)(3)s still have to follow the rules, maintaining their charitable mission, avoiding excess private benefit, and following tax laws. But it might spur debate on how nonprofits can partner with commercial entities while staying mission aligned.
Does OpenAI's deal with Microsoft and everything they're doing, doesn't that sound like excessive profits?
It's definitely a key point of contention. The argument is whether OpenAI's capped profit structure still aligns with the nonprofit's original charitable purpose. But excessive profit is a gray area. Courts will look at whether the mission, benefiting humanity, is still prioritized or if it's just enriching private companies. That's part of why this trial matters.
All right, let's move on to another topic. Talk to me about Qualcomm and their earnings that we have coming up here. Tell me, I looked into Qualcomm a little bit, and it looks like their revenue is kind of flat for the next year, 2-3 years. Their earnings look relatively flat. I mean, maybe growing like 10%, which is not a lot considering chips and AI and stuff like that. But I want you to connect this with the recent...
Feel free to let me.
I want you to connect this with the recent update we had from Intel on their earnings call, talking about CPU demand going from 1 to 7 of GPUs to 1 to 1, so pretty much implying a 5 to 7x in the CPU market. What could that mean for Qualcomm, and what could we see coming out of Qualcomm if they begin this pivot towards AI, which I think they'll be doing?
If CPU to GPU demand is shifting as dramatically as Intel suggests, it signals a broader pivot toward AI workloads. Qualcomm, while traditionally focused on mobile chips, could benefit hugely by leaning into AI-optimized processors, whether for edge devices or data centers. If they pivot effectively, we might see them expanding into AI accelerators or custom silicon for AI inference. That could unlock more growth than their current projections suggest. So, if Qualcomm seizes that shift, we might see them capturing more AI market share, and earnings growth could accelerate accordingly.
So tell me, what percentage of the market does Qualcomm have for CPUs?
Qualcomm's current CPU market share is estimated to be in the single digits, roughly between 5 to 10%. In the PC CPU market specifically, their Snapdragon X line is around 9%. While Qualcomm's overall CPU revenue growth has been modest, if the market shifts more toward AI workloads, they could gain more traction. This puts them in a position to grow, especially if they pivot more aggressively into AI-focused.
So I heard recently that the guy from Apple who created the M chip recently moved over to Qualcomm. When did he move over, and what's their plans with this guy inside of Qualcomm's business?
In 2021, Qualcomm acquired Nuvia for about $1.4 billion. Nuvia's founders had previously worked on Apple's custom silicon, including the M1 chips. Qualcomm's plan is to use that talent to compete directly with Apple's M-series chips in the laptop market and beyond. However, there wasn't a specific named M1 designer disclosed. Rather, it was a team of ex-Apple engineers.
And you know what I like about Qualcomm is their balance sheet is very healthy. They don't have a lot of debt, so if they were to go crazy on AI and data centers, CPUs, and that turns into this crazy thing, they have room to create that debt, I believe. What do you think?
I think you're right. Their relatively healthy balance sheet does give them flexibility. If the AI and data center opportunity accelerates, they have room to invest, whether that's R&D or strategic acquisitions. The key is execution. If they pivot toward AI-centric CPUs or custom accelerators and can grab market share, leveraging that financial headroom could fuel growth. But as you know, capital is only one part. Execution will be the real test.
Yeah, so I think that there's a lot of potential for Qualcomm, especially, looking at the option chain, looking at options. Let's say you had Qualcomm, go up 50% over the next 2 years. What does that option look like? Let's just do the math right now. Qualcomm. What you got, Qualcomm? All right, so Qualcomm's at 163 already. That puts us at a $160 billion company, 30 PE ratio. Get rid of that dividend. Oh my gosh. 163 times 1.5, that puts us at $244 stock. And that would put us at, what was the market cap? 160. So add another 80. So 200 something billion. That sounds totally doable. And I was looking at the free cash flow numbers, and all this is very doable, assuming they have some type of sparks and pivots towards CPUs for data centers. So let's look at the June 2028 contracts. 244. So let's go 230, 240. If I buy the 230 and I sell the 240, that creates a call debit spread, and it's going to cost me, well, market's not open yet, but I'm thinking you might be able to get it for $1.50, and that turns to $1,000, so you make $850. And literally all you're betting is a 50% increase in Qualcomm over the next 2.5 years. No, 2 years, because this is January 2028. 2 years. Well, year and 9 months, okay. Now, considering every single other chip company has just gone parabolic, this company doesn't have a lot of debt. They got good amount of cash on hand. This is a highly, highly probable trade. In my personal opinion, lose your own money at your own risk. So that's what I got for you guys. If you want to hear more about my trading strategy, check out the other videos on the channel. Also, check out feedmetrades.com, where you can track your option trades, track your income from your selling calls, your covered calls, you're selling puts, your cash secured puts, all that good stuff. I also just recently added in a new feature on the watch list. Not only can you add stocks to your watch list, but you can now add options to your watch list. So if there's an option like this option I just pulled up, for example, I could add this into my Feed Me Trades account under the watch list feature under options. And what's cool about that feature is that I can create a multi-leg option and have that all together as one option on my watch list. I know a lot of brokerages, you might be able to add a single option, a single leg in the watch list, but to add in a multi-leg option into your watch list, that's pretty cool, pretty powerful. So check out feedmetrades.com. My name is John. I got options. Stay healthy, stay wealthy, and enjoy the rest of your day. Peace.